Welcome back to the Deep Dive, where we unpack the essential insights you need to stay ahead. Today, we're plunging into a topic it's really defining the future of global tax compliance, this accelerating sprint towards e-invoicing mandates. And there's probably no better example right now of this huge shift than Poland's national e-invoicing system, KSEF. This isn't just some, niche technical thing. It's immediately relevant, especially if you're doing business in or even just with Poland. Our mission today, let's cut through the noise. We're going to dive deep into the very latest updates on Poland's KSEF framework. We'll distill the crucial details, the bits that really matter, and explore what these changes truly mean for businesses like yours. Because this isn't just about ticking a compliance box, right? It's a strategic imperative. It could really impact your operations.
That's exactly right. And what's really striking here is the sheer resolve from the Polish Ministry of Finance. They are absolutely committed to this phased rollout. It's a clear, undeniable call to action for businesses. And our discussion today, it's super fresh. It's based on the latest draft law that just came out, May 30th, 2025. So that really sets the stage for what's coming next.
Okay, right. Let's unpack this then. If you're a business leader in Poland, or maybe you're just working with Polish companies, the first thing you need to nail down are these deadlines. What's the actual rollout plan looking like for businesses, big and small?
Absolutely. So the mandate for issuing invoices through KSEF, it's set to begin in two main phases. Plus, there's a key deferral for some smaller businesses. First up, February 1, 2026. That's when it becomes compulsory for taxpayers whose turnover went over PLN 200 million back in 2024.
Okay, 200 million plus. Feb 1st, 26.
Got it. Then, on April 1st, 2026, it expands. It covers all other VAT-registered businesses.
Right, so the rest follow pretty quickly.
They do. But there is that deferred deadline, January 1, 2027. And that's specifically for micro-entrepreneurs.
Micro-entrepreneurs, how are they defining that?
Good question. It's defined as those with total sales not exceeding PLN 10,000 per month during 2026. So quite small operations. But here's the bit that's really crucial. And you really can't miss this point. Regardless of your specific issuance deadline, whether you're Feb 1st, April 1st, or even Jan 27, all businesses will be required to receive purchase invoices through KSEF from that very first mandatory date, February 1st, 2026.
Wow, hold on. So even if I'm a tiny business, a micro-entrepreneur, not needing to send KSEF invoices until 2027, my systems have to be ready to get them by February 2026.
Precisely. Think about the implications. Your systems, your AP processes, they absolutely must be ready for incoming KSEF invoices from day one, February 1st, 2026. That universal receipt obligation, it fundamentally flips the script on readiness.
Yeah, it really does.
It's no longer just about your own outbound stuff. It's about being able to process any KSEF invoice coming your way right from the start.
That's a huge distinction, almost like a hidden deadline for everyone, isn't it? Seems like a massive lift, especially for the smallest players.
Oh.
Okay, so beyond just these strict timelines, it sounds like the ministry is maybe listening to feedback, making some operational adjustments. What are the key practical changes businesses need to know about?
Yes, they definitely seem to be listening. And one really significant adjustment is the permanent introduction of the offline 24 mode.
Offline 24, what does that mean in practice?
It essentially allows invoices to be issued offline, which offers some much-needed flexibility, if connectivity is an issue or systems are temporarily down. The key condition, though, is that these offline invoices must then be uploaded to KSEF pretty quickly, no later than the end of the next day, to get their identifying number.
Okay, so it's a temporary workaround, but with a quick turnaround needed.
Exactly. And making it permanent isn't just a technical fix. It shows they're adapting to real-world business challenges. It's a pragmatic move. There's also some crucial clarification around correction confirmations, which can get tricky.
Right. Always a headache.
Well, the previous idea, the proposal to replace confirmations of receipt for correcting invoices issued outside KSEF with just a KSEF number, that's been abandoned.
Okay, so that's off the table.
Yes.
Yeah.
To simplify, if you issue a correction to a structured invoice via KSEF, the system itself confirms delivery when it assigns the KSEF number. That's straightforward. However, if you send a correction outside KSEF, maybe email, post, whatever the general rule still applies, you need confirmation from the seller that they received it before you can settle.
Okay, that makes sense. Back to basics for non-KSEF corrections.
Pretty much. Though it's worth noting there are still exemptions from confirmation requirements for certain transactions. like exporting goods or intra-community supply. Those rules haven't changed.
So it really does sound like KSF is adapting, maybe becoming a bit more practical as it gets closer, listening to feedback, which is good to see. How else is it maybe expanding its scope? And what about technical evolutions beyond those operational tweaks?
That's a great point. There's been a significant facilitation, let's call it, with the expanded scope for out-of-system delivery.
Waning.
Meaning invoices can now be sent via traditional channels, so outside KSF circulation, to individuals who aren't conducting business, like consumers, and also to entities that don't have a Polish VAT ID, NIP.
Ah, okay. So dealing with BDC or certain international partners gets easier.
Exactly. It acknowledges the practicalities there. It's a sensible move to ease adoption for businesses dealing with a wider range of recipients. And then on the technical side, authentication is evolving. That's important. Certificates are being introduced as a new authentication method. They'll have a 2-year validity.
Certificates replacing the old tokens?
Well, existing tokens will still be valid until the end of 2026, so there's a transition period. But yes, certificates are clearly positioned as the future. They should be available for download before November 1st, 2025.
Okay, something to plan for. What else technically?
There are also new regulations detailing verification codes. Think QR codes or maybe direct links. These have to appear on every e-invoice, whether it's issued online or via that offline mode we talked about.
On the invoice itself?
Ideally, yes. Or if you can't embed it for some reason, it needs to be sent as a separate link or graphic. And finally, attachments. There's clarification. Maximum size is 3 MB per attachment, which is important if you're including things like contracts or delivery notes.
3 megabytes. Okay, good to know the limit. That's quite a lot of technical detail. It brings up an important point, though, about international operations. How exactly does KSF impact foreign entities, especially in those self-billing scenarios? Cross-border always adds complexity.
It really does. And this is a critical area. Global transactions often, test the limits of these national digital systems. The latest draft brings in a key exemption here. Foreign entities that issue self-billing invoices on behalf of a Polish taxpayer. But, and this is the crucial part, they do not use a Polish tax ID, a NIP, for that specific transaction.
Okay, so if they're using their foreign credentials.
Exactly. In those specific cases, the transaction is exempt. It won't be required to go through KSF. They can continue using traditional methods, PDF, paper, maybe EDI. It offers practical relief for certain cross-border setups.
That's quite specific but important. What about the flip side?
Right. Conversely, if a foreign entity is using an EU VAT number for a given transaction involving self-billing, they actually have the option to use the self-billing procedure within KSF voluntarily.
Ah, so they can use PaySF if they want to, using their EU VAT ID.
Yes. It shows the ministry is trying to navigate these global complexities. They're providing clarity, offering both a mandatory exemption and a voluntary option, depending on the tax ID used.
Okay, that's clear. So let's bring this all together. What does this all mean for you, the business listening in? It really seems the consistent progress, the detailed draft laws, it indicates a strong determination from the ministry to stick to this timetable. They're aiming for legislative completion by July 2025. Which, when you think about it, leaves a pretty short window for getting fully prepared before those February and April 2026 deadlines hit.
Precisely. It's a short runway. And I can't stress this enough. This is not just an IT project. It's a fundamental shift in how businesses process invoices, how they manage tax data, how finance and IT interact. So for CFOs, for tax directors, for ERP managers listening, the time to act is, well, it was yesterday, but it's definitely now.
So what should they be doing, like right now?
Okay, immediate project work should focus on a few key areas. First, implementation scheduling. You need a detailed roadmap. It has to account for the phased rollout, yes, but crucially, it must factor in that universal obligation to receive invoices from February 2026. That receive first piece is your most immediate concern, regardless of your business size or your own issuance deadline.
Right. Get ready to receive first. What else?
Second, data analysis and mapping. You absolutely have to assess your current invoicing data structures thoroughly. Map them to KSF's requirements. This process almost always reveals data gaps, missing fields, incorrect formats.
Yeah.
Things you need to fix proactively.
Better find those gaps now than when you're trying to go live.
Exactly. And third, internal process updates and contractor relations. Review and update everything invoicing, AP, tax reporting processes, and just as important, talk to your suppliers, your contractors, communicate, align with them on these KSF requirements. If their systems aren't ready to send you compliant invoices, that impacts you.
Good point. It's an ecosystem change.
It is. And remember, this legislative process is dynamic. Things are still being modified, constant monitoring, proactive engagement. It's critical to avoid pitfalls.
It really sounds like navigating all this complexity, it demands more than just a quick fix. It requires intelligent, adaptable technology solutions. You can't just wing it, can you?
Oh, absolutely not. Trying to cobble something together last minute for something this fundamental would be, well, risky. Businesses face common challenges here that good solutions are designed to tackle head-on. Things like managing data complexity from different sources, ensuring your master data is compliant, which is tough when regulations keep changing.
Yeah, the goalposts are always moving.
Right. And handling errors efficiently, managing multi-language or multi-currency needs, supporting different invoice formats. The list goes on. For instance, you see solutions built natively on platforms like SAP BTP. They aim to address these very issues. They're designed for a seamless, scalable, secure experience, often without needing heavy custom changes to your core ERP systems. That aligns with what people call clean core strategies.
Right, clean core keeping the main ERP system standard to make upgrades easier down the line.
Exactly. So these solutions can process various data types, work with raw data, scale up or down, and adapt to local regulations like KSEF. They help identify and fix those data gaps we mentioned, getting you audit ready. And crucially, because regulations do change, these solutions often come with automatic updates. So your KSEF capability should stay compliant as Poland continues to refine the rules.
That sounds vital. What about handling errors and global aspects?
Good ones. Look for things like intelligent validation systems that catch errors before submission, ideally with clear, non-technical error messages. That saves a ton of time. For international ops, look for multilingual invoicing and reporting, real-time currency conversion perhaps, and definitely support for a wide range of formats, including the specific structured KSEF format. Some providers even offer like an end-to-end managed service. They'll have in-house regulatory and technical experts keeping you updated, not just for KSEF, but maybe for other mandates too, like VITA in the EU, SAFT, other e-invoicing or e-reporting rules globally.
Makes sense. You need that ongoing support and expertise. So KSEF really is, well, a perfect example, a microcosm of this global digital tax transformation that's happening everywhere. And as we've heard loud and clear, businesses, you have a pretty short runway to adapt. Understanding these nuances, especially that receive first obligation, is absolutely key to keeping things running smoothly. You really need to be thinking about this now.
Definitely. And what's truly fascinating, maybe a final thought here, is that even these draft laws are incredibly detailed, yet they're still subject to constant modification. It raises a bigger question for businesses, one that goes beyond just Poland, beyond just KSEF. How will you not just comply with this specific mandate, but actually build systems, build processes that are truly future-proof? Future-proof against this accelerating pace of global digital tax changes. What does continuous compliance really mean for your long-term strategy, especially when the rules of the game can change almost overnight?
That is a powerful thought to leave you with. It's easy to get caught up in the dates, the technical specs, but step back for a moment. Think about the sheer volume of transactions the system is going to handle in Poland alone. It's monumental, and it's coming fast. So take some time after this. Reflect on your own readiness, your company's readiness. What steps do you need to take? What aspects of this deep dive stood out most for you? Thanks for joining us for the deep dive.